In market news now, global shares rose, fueled by positive tech earnings and optimism Chinese authorities will offer support to its stock markets. The dollar showed resilience on growing expectations the U.S. Federal Reserve won't rush to cut rates. This week, the spotlight will switch to the personal consumption expenditure data. It's the Fed's preferred inflation gauge to assess the outlook for interest rates. Locally, fashion retailer the Fosun Group reported slower sales growth in its third quarter, hurt by a softer Black Friday, power cuts and delays at ports that have affected supplies in the industry. Its fashion rival Woolworths also reported a slowdown in half-year sales growth and flagged lower profit as shoppers spend less. To give us more perspective, we are joined by Zwelakhe Mguni, who is the Chief Investment Officer at Benguela Global Fund Managers. Zwelakhe, thank you so much for your time. I mean, you're looking at global markets which are positive, and we're seeing green across our local all-share index. What's driving markets?
Yeah, thank you, Nastasia. I think there are two factors. I think in the US, we are seeing, as you said, the tech earnings coming through, and they're coming through relatively better than expectations. I think this morning we saw that the Chinese government is offering to assist the country's economy by cutting reserve requirements for the banks by 50 basis points, which means that they can take that money and basically lend it out to the economy. So those two factors are hopefully positive, and I think the market is hoping that will trigger demand for commodities again, as China is a major demander of commodity. Certainly, I think we saw our market in the resources sector. That was where the biggest strength was. I think we almost just under 4% up today compared to other sectors.
Let's talk about the Fosun Group, because they released their trading update, and when it came out, the share price was up 7.8% in this morning. It settled to around 4.6. Why that run up in that share, given that the update was so ordinary?
Yeah, I think it's all about what was expected, firstly. I think, secondly, the backdrop against which they achieved what they achieved was not favorable. I mean, they've had issues around ports. There was heavy load shedding in the first part of their financial year, so the December, Jan 2023, so December 2022, and then December, Jan, Feb 2023. So that was a very tough background. And then we've seen in the last quarter that they were actually faced with ports issues, and that affected everybody in the retail sector. So I think, again, that backdrop, the market looked at the numbers, and certainly they actually looked relatively better than what was expected. I think there were some disappointments in London, the UK. I think it was down 3%. I think Australia was down about 7%. But the main engine, Africa, so TFG Africa, has actually done well, although it was supported by a lot of price inflation, but it was actually able to carry itself through with a growth of about 5%. So there was a lot of noise, and I think the market looked through that noise and basically saw that it was a tough background, and they basically still did well. I mean, the Black Friday sales were not great, and I think their competitors have also said the same thing, but they still managed to get some online sales going through. I think their online sales is their fastest growing element in their business. I think grew about just under 30%. And the online in Africa grew about 45%. So there was a mixed bag of bad news and good news. I think the market focus on the good news.
All right, then what we're going to do is that we're going to put on screen a chart looking at the South African clothing retailers for the viewers to see. And this is a year-to-date chart looking at the share price performance. And the reason I want to put it on screen is because I want to talk about Woolworths, which also released their trading update yesterday. And it was quite interesting to see where their in-store inflation is sitting at, whether it's fashion and beauty, food inflation. And then you try and compare that with where South African salaries are sitting at when it comes to increases. Looking at that trading update from Woolworths, what does it say here about South Africa's upper middle class? Are you concerned at all?
Look, I think the middle class will always handle things a lot better than the average person, but there is a saturation point. I think we are seeing some of the buyers migrating down towards lower price points. So you might buy certain things at Pick and Pay or Checkers, but certainly the price inflation that they were able to put through was significant, but way above inflation. I think it was just about 8%. So that was quite a challenge. I think that what the market's concerned about is that it looks like they had to basically accommodate some price adjustment in the clothing side and to basically support the growth. So the margins did come under a bit of pressure. The earnings came under pressure. I think they said the earnings would be down 3 to 8%. So in contrast, I mean, I think the Fosun Group has managed to trade well, especially in Australia. They struggle quite a lot in Australia as well, Woolworths.
Let's talk about your base case for interest rate cuts, whether you're looking at the Fed or South Africa. But let's focus on the SAB. Are you expecting cuts in the third quarter or fourth quarter of this year? Where are you sitting?
I'd probably say third quarter. I'd say third quarter of 2024. I would expect some cuts. I mean, I've seen some expectations on the US where people are saying March. I think it would be premature. I think we would have to see a disastrous economic growth coming out of the US to basically see rate cuts in the US. So if we cut ahead of the US Fed, we might run the risk of a rand weakening because there might be a interest rate differential might widen. So I would expect that the SAB would wait for the Fed to cut and then they'll basically follow suit. But I think the data is supportive of a hold in the current environment. I think inflation came through at 5.5, if I'm not mistaken.
Yeah.
But you'd probably think there'll be a hold, and then they'll then mark time to get to a point where the US cut, and then they can start shifting down. I think the whole world is probably waiting for the US to actually cut.
All right, Zwelakhe, thank you so much for your time. That is Zwelakhe Mnguni, who is the Chief Investment Officer at Benguela Global Fund Managers. As I mentioned, tomorrow we've got the South African Reserve Bank as well as the European Central Bank announcing their interest rate cuts. We're going to be looking at that and not forgetting Tesla's earnings later this afternoon. That is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.